Good morning, everyone. We all know that implementation of Agenda 2030, these 17 Sustainable Development Goals, along with the Addis Ababa Action Agenda and the Paris Agreement on climate change, these are vital for our future. We know this compelling truth, and the international community has put these goals, these objectives, very high up on its political and economic agenda. And yet, all of us know also this compelling truth that in this complex and uncertain world, the international landscape can change very fast. The winds of change buffet us every single day, every single hour, really. So promises aren't always kept. Political priorities shift and change. Public opinion can change direction. It's therefore very important that all of us keep up the political pressure on decisions that have been taken, but also vital to make sure that we have the money, the funds, the financing to turn our promises and commitments into reality. Now, if you look at the international agenda today, we know that official development assistance, ODA, is important, it's very important, but it's not enough at all to meet our aspirations and our ambitions. ODA must be used to catalyze additional resources and investments, international and national, public, and from the private sector. We therefore have to explore new frontiers in investment for impact, which is the topic of our panel discussion today. And this is especially the case, of course, for the least developed countries. I'm Shada Islam. I'm Director for Europe and Geopolitics at Friends of Europe, and I'm delighted to be moderating this panel. On our panel, and I'm going to start at random, we have Roberto Ridolfi from DEFCO, doesn't need an introduction, a very public face, a very well-known face for DEFCO. Pleasure to have with us also Rémi Rioux, Chief Executive Officer of Agence Française de Développement, AFD, which is a partner for Friends of Europe in our Development Policy Forum, so we're delighted to have you here. Mr. Ambroise Fayol, Vice President of the European Investment Bank, also one of our partners. Xavier Michon, Deputy Executive Secretary of the United Nations Capital Development Fund, the UNCDF. Also on our panel, delighted to have with us Dina Sharif. She's the Chief Executive Officer and founding partner of an organization that's called wonderfully Ahead of the Curve, a social enterprise promoting responsible and sustainable management practices. And last but not least, our young leader, European Development Day's young leader, Nomindari Ertur. She's from Mongolia and is a lead coordinator of the Mongolian Sustainable Finance Initiative. So thank you, all of you, for being here. Now, before we start our panel discussion, we're going to have a little bit of a test of your knowledge on some of the issues we're going to be talking about in the panel. I talked about ODA, Official Development Assistance, and we know, let's have the app. We're going to have you all downloaded the EDD app? How many of you have the EDD? Oh, that's right. That's a fair number. Yeah, that's a very good number. So the question that we're going to ask you to respond to is, what do you think is the percentage of gross national income, GNI, from DAC countries, development assistance countries, which is allocated to ODA in 2015? Could we have the app, please, Alina? Right. So the question is, which percentage of GNI from DAC countries was allocated to ODA in 2015? Was it A, 0.3%, B, 0.4%, C, 0.5%, or D, 0.6%? Keep in mind that the objective is really to have 0.7% of GNI going to ODA. Please vote now. We'll soon have the results. Right. So most of you think it's 0.4%. The correct answer is 0.3%. So you're not really very far off. But I'm going to get some comments from our panelists on this. So let's turn now to Monsieur Rioux. Monsieur Rioux, what does that say to you about ODA knowledge and the importance of ODA, or the gaining importance of catalyzing ODA for other investments?
Ça montre d'abord, bien sûr. It shows, of course, that we're still a long way from our target. The target wasn't even in your question. a lot of effort still needs to be put into get to the target, which was set in the 1970s. A lot of work still needs to be done. Good news, however, is that a number of countries in the world, particularly within the EU, have moved up. France, for example, about 0.38%. Germany have reached 0.7 of GNI at the end of last year. Italy as well is moving up. So there's positive development in Europe and elsewhere in the world. And of course, the second lesson is that this will not be sufficient. $150 billion is the total put into development aid, which is not very much when you look at the domestic resources of the countries, developing countries. So the idea is to try to make the best use of these rare resources.
In an intelligent fashion as a catalyst and as a leverage for other types of innovative financing. Very, very good. Mr. Ridolfi, Roberto, what does this say to you? Mixed results, right?
Oui, bien sûr.
Yes, certainly. I think the good news is, of course, that we have developed instruments to do more with too little, the ODA, but we've also developed a method for leverage to verify that private sector does able to make investment. It's very important. We have to create jobs. Jobs don't come from the governments or the ODA, but rather from entrepreneurs, from enterprise. Thank you.
Let's now go to the second question. I'm just sort of setting the scene for some of the topics we'll be exploring during this hour and a half that is ahead of us. So we talk a lot about blending and the ODA as a lever for a blending, EU blending. So EU blending facilities combine EU grants with grants and action from investment organizations, international private sector, IFIs, etc., to foster investments. And the question that is there is, what is the amount of investment in partners, countries, that could be generated thanks to €1 of an EU grant, but used through blending facilities? Is it 7, 15, 20, or 25? Once again, please, those who have the app, do vote. Okay, well, got it right. Good knowledge. So let's say, Dina, your organization works a lot on this sort of mixture, catalysm, leverage, etc. So what does this say to you, very briefly?
So our goal is to, my company is really focusing on impact investing in the Middle East and North Africa as a way to promote sustainable development. And for us, the leveraging of donor aid and development money is extremely important to the investor space, because in a region like MENA, which is very high risk, it can really serve to diffuse that risk and allow for more investors to come into our countries. So for us, it's extremely important to leverage development aid as well as philanthropic resources within funds like ours, so that it would allow more and more investors to come in and invest in the region without fearing the incredible risk, because development aid can bear that risk and can be a lot more patient in terms of waiting for a return on the investment than a traditional investor would.
Okay, we'll explore this a bit further in the panel discussion, but thank you for that, Dina. So let me turn now to Monsieur Fayol from the European Investment Bank. You get very excited about blending. I mean, the investment bank.
Yes, absolutely, because it's part and parcel of the way we've been working for quite some time now. Your two questions, of course, are linked. The importance of blending is greater than the resources, or rather is in inverse proportions to the rarity of ODA. And so if we want develop what we decided on in Addis Ababa to increase our focus on investments and partnerships, etc., then blending is a very good way to move along in that direction. And we at the EIB, what we've been doing, I think, consistently, internally and externally, within and outside the EU, that's what we've been doing with our investments. The answers that were given, I think, were probably just right, because the levers differ depending on the type of investment we make. Investment in equipment, rather than, for example, rather than in lending money. But of course, it all depends on capacity building and technical systems being made available. We have to have a system in place that has a greater impact, because if we want to have private investment put in, which is absolutely necessary if we want to increase the total of aid assistance in the world, we need to reduce the risk. The inherent risk linked to a number of sort of projects. And to do that, you can use blending. We have a good example of this, the Boost Africa initiative. I'll probably be talking about it later if you want me to.
Very much indeed, Mr. Fayol. So now let's start the panel discussion, and I'm going to kick off with you, Monsieur Roux, from the IFD. We're talking about investments for impact, and IFD has been quite busy looking for innovative financing, being really spearheading that drive as well. So give us a little bit of your insights into how well have you done, how successful have you been, and what are the prospects for the coming years, where ODA seems to be not meeting the targets?
Well, obviously,
Of course, there was a lot of decisions taken in 2015, Addis Ababa, New York, Paris, and of course there's been decisions taken by the US recently, but we have to take seriously this international framework, and this tells us a number of different things. We have to protect the poorest countries, those that don't have access to a developed financing system, don't have access to loans, but we also have to activate as dynamically as we can ODA throughout the world to prepare projects to take away risks and to make sure that we have counterparts involved that can properly manage the spending of public money. Now, all our colleagues in the EU and the Commission have been very active, certainly since 2007 even, when this movement for blending of resources was first put on the table. And as people have responded in your questionnaire, I think, realize that, that we can mobilize €1 billion of EU funding. We've got 5 billion French support, so we've got about 15 billion euros available. We do this with the European Union, but also we do it internally within France also. We started back in 2014. We were first to do this. The French government was the first to do this. We made available the first public green bond. We have social bonds so that we have are able to work in French overseas departments. All of this is done in order to create leverage. But this is not enough. It's a lot, but it's not nowhere near enough. It's public or official development aid is well below what we need. 2/3 are donations. Donations are very good, but we have to use this money to mobilize, to get a greater leverage on the private sector and throughout the system. And for Roberto, I'd like to add this. The European share, which is about 10%, that amount has to increase. I'm sure that's your intention. We have to be more powerful, more dynamic, more active.
Roberto's been nodding away. And obviously there is this European investment plan as well, the external investment plan. So how are things going with it now at the moment, Roberto? Is it advancing, progressing? Is it being used the way you thought it would be?
Well, it's advancing quite well. It's still in the final phase of legislation because, as you know, we propose a regulation to carry out a plan. First novelty I would like to point out is that the plan includes 3 pillars. The first one is blending, and there is quite an innovative part into it, which is the guarantees for the private sector. This is very new. The second part is technical assistance, not only to prepare investment, and I would like to add sustainable investment, always, to produce sustainable and decent jobs, but also technical assistance to work on the third pillar, which is very, very often the most important. And the third pillar is the conducive environment for investment to take place and flourish. On one side is legislation in the country, on the other side is red tape bureaucracy. In other countries we have problems of corruption to levels that are unmanageable. And all this is dealt with. So the plan is making an advancement of our blending perspective. D'abord, I agree with Vice President Fayol. Those figures are all right, because you have a small leverage when you go in the small scale, private sector in rural areas to do rural electrification or small SMEs investment. And this we have tested with Agrify and Electrify, managed by the EDFIs, the European Development Finance Institutions, all together. And then you have a very high leverage when it is sovereign guaranteed. But sovereign guaranteed means that the Minister of Finance of country ABC will put a guarantee on a loan. And we cannot exaggerate on that. Countries shall not go into debt, public debt so much. So we are trying to find ways and means to stimulate much more equity investments, much more risky investments with our guarantees, rather than asking countries to put their signature, because this creates sometimes even macroeconomic bad cycle. So the good news is that indeed we are creating a sort of B cloud, a blending cloud, operating with 15, 20 actors. Of course, the main actors are the European actors, but not only. And that is a very important aspect of our work. I say B blending cloud because that harness really all the different capabilities of small banks, small private sector actors, big private sector actors, government willing to do infrastructure. And that is something that is really coming up very nicely with the external investment plan. When it is approved, we hope that Parliament and Council with the Commission will agree within the coming weeks. We will then be ready to shoot on the other 2 pillars.
Okay, so let's get the point of view now of the EIB. Monsieur Fayol, of course, the EIB has been very active in the European Fund for Strategic Investments, the so-called Janka Plan. How are you going to use that experience that you've gained to work with the European Commission, with all your other partners, on the external investment plan? What are the lessons you can draw and implement?
Well, the starting point for us for the launch of the European Investment Plan, which with the European Commission, this is the so-called Janka Plan, was the recognition that in Europe, investment had fallen during the crisis. This was really problematic for us vis-à-vis future potential growth. And the reason for that was less the lack of resources, but more the ability of various players to take risks. And we combined that, so this is a guarantee fund from the budget and EIB to guarantee the ability of EIB to take more risks without deteriorating its signature, and crowding in significant private investors with a leverage of 15. So we are always in the same kind of leverage. It depends on the level of risk also. And combined with that, a second pillar which is on advising, with what we have called an advisory hub that is also together with the European Commission, and a third pillar that is more looking at which kind of reforms have to be undertaken by member states to improve the business environment. Mm-hmm. And the main idea behind the external plan for Europe is the same. How can we combine a platform for investment that in priority sectors for development that is supported by blending and resources to make this kind of leverage investments, supported by policy dialogue with our partner countries, together with advising, catalyzing private sector resources and increase impact. That's what we are aiming at. And the last point I'd like to stress is one of the reasons why the Europeans are looking outside of Europe to the same kind of concept as within Europe is because the problematics are more and more alike. And if you look at climate change, it is clear that the problems we are facing are not really different from the problems that many countries outside of Europe are facing. When you look at the problematic of digitalization, this is the same. When you talk to mayors in a remote part of France, willing to have the broadband, this is not very much different from the project that we are implementing and that has been signed yesterday by EIB here in Cameroon and Democratic Republic of Congo, which is called Africa Mobile Network.
Yeah, we're going to talk about that in a session later on today, actually in the afternoon at 1:30. So thank you for flagging it already, Monsieur Fayol. You talked about partner countries and you talked about how similar problems and challenges are in different regions. So I'm going to turn now to Dina. Dina, you are in Egypt, and you've heard the three gentlemen talk from the institutional point of view, the theory of it, and their hopes. I was wondering, you have the actual experience of trying to blend, bring people together, and working in a very politically, if I may say, complex landscape. What is your impression?
So, I think in this context, we're really talking about the importance of job creation in a region like the Middle East and how we can do that sustainably. So I just want to ask a quick question. How many people in this room are above the age of 29? Raise your hands. Okay, so the majority of the room, you're already older than the majority of the population in the Middle East, which has the highest youth unemployment rate in the world, but also the highest female unemployment rate in the world. So I think for us, what we talk about often in the MENA region is we need to create jobs at an extremely fast pace, because not only is it a national security issue for most countries, but these young people need to transition into adulthood and they have a right to have healthy lives. Now, we can do this by creating very short-term, unsustainable jobs, which has been often the case, or we can be a lot more thoughtful and mindful about this. And I think that requires three key factors when we're thinking about blending and using development aid to create jobs and mixing development aid with investor money to create jobs. We need to be thinking about how we can include the base of the pyramid as both consumers and producers within the private sector. That is extremely important to not just inclusivity, but also sustainability. And for example, in Egypt alone, where you have the majority of the population at the base of the pyramid, those people pay about 40% more than what someone like me would pay for basic products and services, because the private sector is not being inclusive and including them as consumers, targeting them as consumers or as producers, but investors are also not asking them to do that. So they're not seeing the value and the opportunity at the base of the pyramid. Two, impact investing. So what we've been seeing is that the majority of investments in MENA have not been focused on the intersection between how we can use the private sector to solve our biggest challenges. So my colleague over here to the left was talking about entrepreneurs and how we need to see entrepreneurs be at the forefront of making the world more sustainable. And in the Middle East, entrepreneurship is the new sexy term, and we do see a rise in young people starting businesses, but what we're trying to do is to really promote the use of entrepreneurship to solve and scale these solutions at an extremely fast pace, which is only something the private sector can do anyway. And my last point that we hear lip service about, but we don't often see in implementation is gender diversity and the specific targeting of women in the private sector and women-led entrepreneurs. So in a country like Egypt alone, and this is the case actually across the Middle East, if we work to see an equal ratio of men and women within the formal economy, that could increase our GDP by about 34%. That is a huge opportunity for growth, and we're not seeing development aid, we're not seeing investors really focus on that element to leverage sustainable growth. So in sum, I would say base of the pyramid, really push forward impact investing and also focus on the gender element. And that's one of the reasons why we're launching a new impact investment fund called Ripples, which is going to be the first in the MENA region. It'll be a $150 million impact investment fund that focuses on growth, but it's going to focus on these elements of inclusivity, gender diversity, and also how the private sector is using technology and their ability to scale to solve our most pressing problems in agriculture, environment, education, and healthcare.
A very basic question, Dina. Given the instability and the political complexities of the region, do you see private investors showing an interest? Are they there? Are they knocking on your doors?
Not in, well, we see DFIs knocking on our doors, right? But cautiously. So I think, Egypt is going through a very tough time right now, as is the MENA region, as everybody knows by following the news. But I think this idea of having development aid work with investors to help the economy grow sustainably and inclusively and to use the private sector to solve problems is something that we need to push forward aggressively. And that's what we're not seeing enough of. So the idea of sustainability, inclusivity, and when I say this, I mean not just paying lip service to it, but to seeing it really implemented on the ground properly and to see partnerships being leveraged for true sustainable growth. This is what we really need to see. So I think investors are interested, but very cautiously because, economic recessions are great times for investors to come in. Those who come out on the other side will always be winners. So.
Right, okay. We'll come back to that because I want to ask our institutional friends here to respond to what you've said, but just do think, are you doing enough in terms of inclusion, gender, jobs for young people, etc., moving from the theory to practice, walking the talk, as it were. So please, all three of you, actually four of you, but I'm going to think about it. Xavier, you work with the least developed countries, and we've talked about investments, and obviously people are going to regions and countries where there are benefits, where there are profits, where they can make money. That's normal. That's what business does. But you work with the least developed countries, and so how can ODA, in your case, still very essential for the LDCs, do that play that leveraging role?
Yes, first of all, the SDGs have a little bit framed our discussion and inspired our discussion throughout the last 36 hours. And we do believe that if we want to meet that ultimate aspiration of SDGs of leaving no one behind, we have to start with LDCs that basically are the home of half of the poor in the world. And that's, I think it's an issue of principle and values, and we all defend that. Since we're based in New York and we have, let's say, an exchange with the investment industry and mostly investment bankers, but also we have been connecting also with the impact investment industry, we get certain messages. And I'm starting with the problem, because the idea is that our role is catalytical. As UNCDF, we're not a primary investor. We're an early supporter, incubator. We work on de-risking. Okay. And we work in last mile spaces, basically where the expression of poverty, exclusion, and inequality are the most evident. And of course, where finance doesn't arrive, so where the risk is higher. And that's the mandate that we have, and let's say risk taking is inherent of what we do. But the message we get is there's a strong interest in emerging markets. And the question was, emerging markets, LDCs are not even emerging markets. I'm not even sure if they're frontier markets. At least some are frontier markets. And we started asking questions, said, look, to impact investors, can you give us an idea of your portfolio and where it is located? At least give us some ideas of numbers of part of your portfolio. Very little in LDCs. You had Cambodia, certain countries, but there's a genuine interest and an awareness, like also the investment banking industry, that these are spaces where you have to start seeding now, but where there is lack of information, there's no track record, you don't know the players, you don't know market behaviors, the ticket sizes are small, the market size are small, access to financial services and financial market is extremely reduced, and of course the ease of doing business is what it is. So where can we connect? Because the question was, there's willingness, and where we told is, we're looking for partners on the ground. We would like to invest, but finding an entrepreneur with a good idea, with a minimum of track record, and someone who can help us, not guaranteeing, but vouching for them is not easy. On the other hand, you have entrepreneurs more on the SME side that are looking for investors. And then that's where we fit in, and you know, we have a different role in our respective organization. Our role is to be the primary risk taker, to invest in the early stage phase of enterprises, and in last mile environments. And we do believe that we see that pipeline that everybody's talking about, the investment pipeline, that is basically being pulled and being capitalized by others, and can create that coordination. When we're talking about blended finance, I think there's all issues of coordination. There's some kind of sequencing in the growth of a company, and some have to support at the beginning. We are there with the risk-taking, and of course some other players, like some that are here, coming with, let's say, the heavy investment. And I think that's a division of labor that is, we have to value, we have to cherish, and see how we can overall fit in this equation.
But you face a really challenging task. It's
when we analyze our portfolios, we know that we have certain percentages of failure, and that's why we give performance grants. According to maturity model, which is incubation, it's mostly grants and technical assistance. We try to develop a proof of concept and show that there's a validity in this initiative, in this enterprise. And when there's a certain evolution, the maturity of this enterprise, we provide loans. And if we can, we move to, of course, guarantees to seed others and bring and lower the risk. So this is the sequencing. It's done at our scale, but what we want is to seed for others to come in. And maybe I can give you one example at least. In South Sudan, which is actually our largest program globally, we have brought Equity Bank. Equity Bank in 2009, so a little bit before the independence, so in Sudan. And with all the, let's say, the precautions that they took, but with a small investment of a couple of $100,000, they started opening subsidiaries. Just imagine opening a subsidiary, you have to import everything. Everything comes from abroad. And they acquire about, after 4 years, about 136,000 new clients in savings, about 170 million in deposits.
So, okay.
They put $10 million from their own capital, and we seeded that with a couple of $100,000. I think that's a clear sequencing, and you do the math yourself, about how we can, being a catalytic agents and being basically at the beginning of a phase, and bringing finance where it needs to be.
Right, thank you very much. Let me turn to Nomindari. Nomindari, Mongolia is a big country that does attract investors, especially in your natural resources. But you've set up the Mongolian Sustainable Finance Initiative, and that's quite a unique thing in the country. So could you just give us a little bit of your experience with some of the questions that the gentleman and lady here have been talking about? What is the challenge you face, and what are the opportunities you saw for this kind of an initiative?
Okay, thank you very much, Shada. Definitely, as the panelists has said, green financing flows are very important, they're a priority. But I also believe that it's very important for us to ensure that the traditional financing flows are also influencing more responsible and sustainable business practices. Like Dina said, more decent jobs. We need to have jobs that are actually following at least the minimum legal standards. And while we are trying to raise 100 billion per year for climate change mitigation, there's still another 500 billion that's being used to support fossil fuel production. And with the recent United States withdrawal from the Paris Agreement, it seems like this number is only going to grow. So it's very important for us to understand the rules that govern the financial sector and make sure there are actually less incentives to fund what we call brown development. So especially in countries where we have the enforcement of environmental regulations very weak and often subject to corruption, the banking sector holds a very powerful position to use private sector mobilization to influence more sustainable development. And this is really a proven testament of the Mongolian banking sector's potential, because in 2013, all the banks convened by the Mongolian Bankers Association, the organization that I represent, came together to voluntarily introduce sustainable banking principles. And the principles were actually adopted by all the 15 banks in the system, no matter of the size, market share, involvement of DFIs in their shareholding. They're all following the principles, and what they're doing is to conduct environmental social risk assessments on the loans, and if there is a risk identified, they work with the clients to come up with an action plan to make sure that these risks are actually mitigated. And what I see as unique about our initiative is, first, it's a voluntary initiative driven by the private sector, as said. Secondly, it's actually now influencing a transformative process of the entire financial sector. So it's going beyond banking. We are now trying to introduce sustainable finance practices in the financial regulatory environment, capital market, insurance companies. It's something that's really driving a big change in the country. And the third part is, I really see it as an initiative that's scalable and that has a replication potential. And in fact, we have already started working with countries like Cambodia, the Philippines, Kenya, to learn whatever, share whatever experience we have and help them develop their sustainable finance roadmaps. But along the road, we have also understood that, of course, the financing incentives part is very important. And now we are partnering with the government of Mongolia to also establish the nation's first green credit fund. The fund will, of course, aim to introduce more low rate, longer term financing and also risk management mechanisms to support projects and companies that are supporting green growth in the country. And what's unique about this is the private sector will bring in the best governance, the professional management, the independent management that's needed there, because it will be help us to avoid the political changes that might influence when the government takes charge of these kind of funds. And what we are trying to negotiate with the government right now is to have the support in terms of covering the foreign exchange risks of the funds that will come in foreign currency, because of course, like many developing countries, this is still the critical factor that is resulting to the high interest rates in the country. So I really believe this is an initiative that shows that how the private and local sector actually drives positive change. And if the right support and incentives are given by the international community, I think this is a model that would actually really succeed and is actually replicable in other countries as well.
Okay, thank you. I'm sure there'll be questions for you later on about what kind of support you actually need from development organizations to take your initiative further, to scale it up, as you were saying. But let me just turn to the three gentlemen here and come to the question of inclusion and local actors and jobs for women and young people in regions where there are more young people than here in the room. But so let's start with you, Monsieur Roux, on that. And then please, I'd like to open the floor to questions and comments from yourself. So put your thinking caps on. I'll be turning to you in about 5 minutes. So, Monsieur Roux.
Deux remarques peut-être.
I have just two comments to come back to what Dina said in particular. First of all, gender is a no-brainer.
doing something. We know it's a no-brainer.
Toute la recherche
All the research shows that as soon as women are involved in a project, the impact and the quality of management is improved. So that's not a question. We have to do that, and it's a real priority in my organisation. We have 50% of our activity in Africa. We cover the whole continent. We have another section on climate, and 50% of our projects are eligible for gender equality. And we also worked with a Turkish funding, TSKB, and we have been using that to promote gender equality within their organisation that way. I also want to say that obviously developing an economy in a country cannot come from above, from the government. We need all of our financing institutions to transition towards what we call the non-sovereign stakeholders, all of those non-government stakeholders. We want to have 100%, but 50% of the French Development Agency is carried out in work in cooperation with local organizations, with NGOs, with non-state actors. And it's there that the external investment plan, the very ambitious plan, is so very important, because it sends out a clear message to all European stakeholders. And I think that's why the EU really is at the forefront of this innovative shift towards work with more non-state actors.
Adopted yesterday gives a lot of space and priority to the gender issue, to young people, to peace and security. Local actors is a big issue as well. How is the connection with the EIP?
Well, the connection is very, very intimate. The EIP will be based on the consensus. The consensus is the philosophic umbrella of the EIP. The EIP is on itself a way to put together, as I say, these three different pillars. Very smart financial engineering in this big cloud, in this banking cloud of working together of different organizations, small, big, sovereign, not sovereign, equity, subordinated loan, guarantees, all the different instruments, technical assistance, fundamental to harness what are the, first of all, the projects, first of all, the investments that must create sustainable and decent jobs, but on the other side, and that is very important, I will not be tired to repeat, the regulatory environment, so that but starting from local private sector. Don't imagine that we ask the world to come in a country. Let's start from the country. I went on mission last week in my old duty station, Uganda. The National Pension Fund is starting to invest in local enterprises, which is much more risky than going in another market. On the other side, we have trillions of money sitting on negative interest rate, and we must mobilize them. But to mobilize these trillions of money, and then we will see the articulation in micro enterprises, the impact of micro is fantastic. The impact of cooperatives, especially by women, is fantastic. Okay. But you need an ecosystem in the economic space which fills all the dots. So the micro, the small, the medium, the big, because otherwise the economy will be asphytic, will not be able to have its robustness against shocks. Yeah. If you do an economy only on micro, the shocks will kill the economy. So we need to fill the space, and the external investment plan is looking at that, taking from the one example, one new area, very new area, is municipal services, urban areas. Mm-hmm. We have waste collection, we have energy efficiency, we have ecological services. This will create a lot of jobs. Will create a lot of jobs and improving the quality of life. And we have to dive into it. We have to dive into it with a mix, of course, of public-private interventions. And that's where the protection and the ability of development banks, like the European development banks, Agence Française, of course, starting with the European Investment Bank, but going to all the other actors, this will make such that we will be able to attract the pension funds to invest in big schemes.
Right.
So we have to package schemes so that the big money comes, and then that will make the difference,
Right.
I think.
We had a conference on Africa at Friends of Europe a day ago, and one of the panelists talks about PPPP, which is people-private-public partnerships. And I think that's quite an interesting formulation to take forward when we talk about PPP. Add a P.
In the consensus, we talk about people, planet, partnership, prosperity,
There you go.
and peace. So
5 Ps.
again, 5 Ps.
Absolutely. Monsieur Fayol, about this inclusiveness issue that we brought up.
I think my two colleagues have already said a lot of things that I completely share, and that the EU Bank is also trying to implement. I'd just like to add three elements. The first one is on SDGs, because I see less people talking about SDGs than when they were adopted, and I think it's
become
I
part
hope
of
it's not a worry.
I think it's become part of our DNA now to know about SDGs.
And including on measurement, you were talking about women, etc. It has to be measured, and that's something that we are seriously working on at the EU Bank. The second thing is about the capacity to absorb shocks in the economy. Mm-hmm. We need to improve resilience. And actually, we at the EU Bank are implementing an initiative, especially for the Middle East, the countries from Lebanon to Morocco, the southern neighborhood, and the Western Balkans, to make sure that we can increase the level of lending by 15 billion euros, especially for those sectors that are more risky. SME support, this kind of thing that will absorb the shocks that they are indeed living under. And my final point will be on innovation is not something that is only for the advanced economies. It has to be also for the economies in Africa. Mm-hmm. And I was talking earlier about Boost Africa. This is a very interesting initiative that we have taken with the African Development Bank and with the European Commission. 150 million euros to have in 1,500 small companies, right. 1 billion euro of investment in startups, venture capital. This is these kind of companies that are developing in Africa, mm-hmm. Mm-hmm. and they don't have enough resources because this is indeed quite risky investments. It was exactly the same. It is exactly the same in Europe, and we want to bring that to Africa.
Okay, thank you very much, Monsieur Fayol. Thank you, all of you, and let's get some feedback from our audience here, people who've been listening for the last 45 minutes or so. Can I have a show of hands, please, of how many people do want to ask questions to our panelists? I see one hand go up, but I'm sure there are more than that. Absolutely. Okay, and I know that there's a here too. Not yet. Okay. They're roving microphones. So let's start with the. Oh, is a lady there? Yes, please. Please identify yourself. And my one plea is be brief, so we can get some interaction going. Thank you. Please.
Hi, my name is Alessia, and I work at an organization called WaterAid. And thank you so much for all of your remarks. They were really interesting. We've been talking about financing and investing in the development sector, and I'm wondering about drilling down a bit into subsectors and the prioritization of different subsectors. My organization works in water and sanitation, which is a very, very key and sort of basic sector with which you can't really do a lot of other things. So we've been talking about job creation, focusing on women, but in our experience, if women spend most of their days going to fetch water, they can't access jobs. So I'm wondering, in this new world of SDGs, how do we prioritize investment into subsectors?
Thank you very much. I had a question here. Yes, please.
Thank you very much to the panel. My name is Burcu Tunçer. I'm from UN Environment Center on Sustainable Consumption Production. We are working as a partner to the SwitchMed program, which targets North Africa. So one of our panelists is actually also our target group. And we work with startups. We train startups for green entrepreneurship, and we have a pipeline of 150, 200 startups called the Switches. And we have been looking with DG NEAR into the investment facility. And there has been actually yesterday at World Circular Economy Forum also discussion on this topic with EIB, EASM, etc. However, we have an issue that the funds are too big and they don't arrive to the pipeline of the switchers. There is a missing middle of 10,000 to 150,000. How can we get the big amount of money to the women, to the youth, to the switchers? Would love to hear from our panelists. Thank you.
Thank you very much. The lady over there. Yes, two ladies over there.
Sophie Vossenaar, I'm with African Parks. We are into conservation in Africa. I would like to pick the brains a little bit of the panel. If they see opportunities in, for instance, in conservation, where we're very dependent on grants for now. Of course, we try to achieve a lot of long-term impact, but we look at very long horizons to actually be able to change our parks into conservation-led economies. So I'm looking there for some ideas. There's some talk about bonds, but we're still looking at structuring those things. And the other thing would be, you talk, for instance, about energy investments. I wonder if that creates jobs immediately, because that's very indirect. Only when the electrification is there, the jobs will come. Would that qualify, for instance, in the EIP? Thank you.
And the lady there. And that's it from the floor. I have one question here as well, please.
Hello, thank you. My name is Teddy Nias and I work for CARE International. Thank you very much. I heard with a lot of interest and was keen to know about the particular support to gender equality and the attention paid by the French government. Also, I'm very aware of the commitments at EU level. Thank you for mentioning that. However, what I didn't hear about and what I'd be interested to know more about is how you plan to actually reach the bottom of the pyramid. I mean, the real inclusivity piece. And that is the big challenge. And it's one thing to reach a lot of women, but it's also extremely important to reach the poorest and to ensure that truly no one is left behind. Thank you.
Just looking to see, okay, all right, this is always the case. Always the hands go up very late. I'm going to take two quick questions. So the gentleman over here, please.
Merci. Laurent Chan de Économique Ambassade du Cameroun.
Thank you. I'm from the Economic Service for the Cameroon Embassy. If you want impact investment, I didn't hear the panelists talk about the pre-requirements to achieve that impact. So, for example, education sector and health. I get the impression that if you just focus on the industrial commercial sectors, then there's a whole chunk of the world. There are whole regions that won't benefit from that won't feel that impact. So could you say something on that, please?
Question, and there was one other person who had put up their hand. Let's take the gentleman over there. Yes.
Thank you. Matthias Altmann, private sector partnership consultant. We have talked a lot about the private sector as a partner for financing for development. So Mr. Ridolfi explained to us the 3 pillars of the external investment plan, where the first pillar is on private sector financing and mobilization through blending, but the second pillar is on technical assistance and the third on business environment reform. In this second and third pillar, is there also a role for the private sector to support, not maybe through financing, but through its innovative capacity and expertise. Thank you.
Thank you. So he was good and brief, so I'll take the question from the lady here. Yeah.
Good morning, Carolina Aranha for Brazil. I have a platform, Pipe.social, that basically showcases businesses with social and environmental impact in Brazil. And we basically have more than 1,000 business mapped there, and we are quite more mature right now in terms of, you know, the stage of scale of the companies. But unfortunately, I hear a lot about investing in Africa and South Asia and, you know, in other parts, but I don't hear about investing in South America, so I'd like to hear more about your thoughts.
Okay, thank you very much. So the questions seem to be going very much in the same sense of, you know, actually how is it sort of socially viable investments in the environment and water, why we're not in with local authorities. And the question I have here from Platforma is also about how blending can support local development strategies and notably local government investments. So very, very similar questions, I think, about the social value and the inclusiveness of what we're talking about. So let's go backwards and end up the other way around that we started. So could I start with you? Ertura, yes? Would you like to come in? Yes, to some of the questions that have been raised, which I think will impact on you.
Okay.
Nomindari, please.
Yes, thank you, Shada. Actually, the questions that were asked, I also want to ask our panelists. Obviously, I'm not the person who's financing here. I'm actually seeking finance from these organizations, so I really agree with the questions that were made. Just on one of the points, the lady mentioned that you are promoting companies that are doing well in the social and business environment. I think that's very important because if you look at the current regulation of the financial sector, they do not really sufficiently reward good businesses, or they do not also sufficiently discourage non-sustainable businesses. So this is really a gap because the financial sector, we are trying to help these businesses to become more sustainable, but on the other side, the regulatory support is not really there. And I personally really believe that both at the international level, national level, financing regulators need to revisit their mandates and include sustainability as a key element of financial stability, of monetary policies and strategies, because this is not about corporate social responsibility anymore. This is something they should be seen as an integral part of business as usual. So I think these kind of initiatives are very important to us. That's also what we are trying to do in our country. And for the rest of the questions, I'm very actually looking forward to hear the answers from the other panelists.
So let's go to Xavier Michon.
Yeah, maybe one point on the relationship with the bottom of the pyramid.
I think
their work?
Need to amp the noise sound a bit.
Can you hear me? Yes.
Yeah, go ahead.
Very quickly, you've made a reference to the bottom of the pyramid and inclusion and women. I think that that's an important point that I'd like to raise. We all heard Ms. Lagarde yesterday morning in her very eloquent speech talking about the inclusion of women and basically what affects, I mean, the impact it has in their immediate family as providers of supporting education, health, etc., within the immediate circle in the communities, but also as productive actors. And she even gave us some figures in terms of what it meant in terms of GDP growth, additional points of GDP growth. So the elements are there. And maybe a quick example on financial inclusion, it's how we can support financial service providers, mobile operators, that because of the perception of risk, but also the calculation in terms of the transactional cost to reach out to poor communities and mostly rural women and young people, that they need an incentive. And there we can support them in providing them seed capital, whether it's grants with TA, for example, to bring into the population and discover a segment of the market that, first of all, is viable, and that's important. But we see the direct effects, and I give you two quick examples, and taking into account that Mr. Rodolfi was in Uganda, we have supported the MTN Uganda, the larger telecom in the country, with an alliance with the Commercial Bank of Africa, and basically they launched Mocash, which is basically a micro-savings, micro-lending product using cellular data, cellular phones. First of all, most of the users, and we looked at it because we analyzed the data, there's a big percentage of women utilizer. But when it was launched, 86,000 people open accounts within a matter of hours. 3 months later, we had about 150,000. And with about 6 months later, 1 million people. And we did the analysis of basically of users of those accounts. We saw that, first of all, there was a big percentage of women. And it wasn't only to buy for consumption purposes, to buy fertilizers, to pay wages, but women were using that for education and health. And that's an important element.
Right.
And so financial inclusion is a stream that is worth giving the attention. We invest heavily on that, and I believe that that's a sector of innovation, and using digital finance, that's a concrete case where we can reach out to communities in the poorest environment and find a win-win solution where basically financial service providers and telecoms, because of the perception of risk, they say this is not viable. And once they discover that there's a niche market, they start expanding. And that's where you have the win-win, the development aspect,
Right.
but also the win-win on elements of profitability of the economic actors that we work with.
So perceptions change, shift. Thank you very much, Xavier. Dina?
Yeah, so I feel like there are a lot of issues that were brought up. For example, how to, things related to the funding gap. I'm very familiar with SwitchMed. Issues related to gender or inclusion of women and gender equality. How do we reach the bottom of the pyramid? How do we really ensure impact investing as opposed to just focusing on hardcore industry? And I feel like a lot of this goes back to education. So as we talk about things like sustainable investing, impact investing, the need for business solutions to sustainable development goals, we need to take a step back and realize that we also need to disrupt our thinking in a very big way. And I think everything that we're talking about requires serious mindset change. So we can say that we know it's a no-brainer, gender equality is a no-brainer, but is it happening in practice? Not as much, not as fast as we want it to happen. So when we have, for example, I see new funds emerge in the Middle East every day. So in just in Egypt alone, over the past year, I've seen at least 4 funds arise that are not targeting that funding gap, and also talk about gender equality, but none of the DFIs that have invested in this fund say, we want your investor committee to have gender diversity, nor do they say we require a particular percentage of your investments to go to female-led businesses. They encourage it, but it's not pushed forth aggressively. So, and I'm not saying that to create blame, I'm just saying that we need to see a huge mindset shift to happen. And you know, I'm also a professor at a university, and I think this, when I talk to my students, that mindset shift has to happen from the younger generations of how do we start seeing opportunities in every major problem that we see in the world. So can we finance subsectors of SDGs? Absolutely. Your issue about water, I think every single SDG has a business opportunity that can happen at a very large scale that will create jobs and solve that problem of water and women having to walk for miles to access clean water. That requires serious innovation, and the business sector has a big role to play in that. So I think that also requires a huge shift in mindset from development organizations, from investors, and I think from actual entrepreneurs themselves, and also from NGOs. So I think we need to shift our mindsets to becoming a lot more long-term focused. We need to shift our mindsets to becoming a lot more inclusive and seeing the opportunity in inclusivity, because the reality is our private sector doesn't see the business opportunity in the base of the pyramid because nobody shows it to them. So, you talk about investing in the base of the pyramid, but most of our private sector is focused on A and B classes because they don't see that they can make massive bottom line profits at the base of the pyramid while also providing that same sector with access to products and services by including them into their supply chains. That's a huge opportunity. So that requires a big mindset shift. So I would say a lot of the answers to the questions is that also development organizations need to focus on creating the right ecosystem and mindset required to take this all forward. And that needs to happen very, very fast.
Right. I think you're absolutely right. I mean, there was a time when the women's issue was always an afterthought. Now it's no longer, that is for sure, but I think we have to start making sure that it's at the core of what we do. And when you were talking about bottom of the pyramid and business opportunities there, I think in India, there are companies out there that are really sort of exploring that and actually chipping into that part of the market. And I've been quite impressed, I have to say, what's happening in India in that sector. So thank you very much for those remarks. Mr. Ryu, please.
Je vais faire peut-être une réponse un peu.
Perhaps I can give you a general answer to group together some of the questions were put. First of all, I'd like to pick up on the fact that SDGs are a revolution. One of the major contributions or transformations being made by the SDGs means that we're going to be looking at geographical, sociological, and historical contexts. There's a Billy Steria book, Elusive Quest for Growth. There are sectoral priorities that supersede each other over time, but we do really need to try to have territorial geographical intelligence to understand what's at stake in various different regions. It's very difficult. And it could be water, it could be biodiversity, depending on where you are. But that's a new feature, I think. And then, of course, our institutions need to have the capacity, technically, we need to have engineers and specialists to cover all of the sectors to meet the demand. And I think all of us in each of our institutions and collectively need to work together. We need to work together and support each other and rely on each other. I think we need to save, there seems to be a tendency to try to cut Africa in two, Sub-Saharan Africa, North Africa. But if we did, what would we do? I think we've underestimated the need for multifaceted approaches and solutions. Now, with regard to that, so we have to look at things geographically. I think also, and this is another lesson derived from this panel today, we have to need all financial instruments. We need loans, we need donations, we need guarantees. We also used to be able to write off debts as well. We need to look at all these questions together. And if we were to use all the instruments that are available to us, we'd be able to perhaps better meet demand. And we also have to make sure we have the right interlocutors locally, work with local players, local stakeholders. We have to tell ourselves or ask ourselves, how can we finance, or how will economies in the South be financed in 10 years, 15 years, 20 years, 30 years' time? We have what share for sovereign, what share for non-sovereign, what share for big companies, small companies. We have to look at all these aspects. We all have to work with local banks. We all do that. We're doing that quite well. We work with banks in 40 different countries now, in southern countries. And I think there's another point that we need to look at as well. Public banks in southern countries. We have this model in Europe. There are lots of examples in Germany, France, Italy, not so much in the English-speaking world, but certainly in continental Europe. And in all the larger countries in the south, there are institutions of this kind that can be interlocutors, can be intermediaries, can develop programs so we can have a rapid bottom-up effect.
Ah si, ça marche. Merci beaucoup.
I will agree with what Rémi has just said. Perhaps I can just mention 3 additional elements, however. I'd like to do a bit of publicity, if you like. Yesterday, we published the EIB Outside the EU, which is our annual impact activity report, our activities outside of Europe. And to come back to the question of water, last year, just some figures, we improved the quality of water and sanitation for 6.7 million people in the world outside Europe. These are significant figures. It's not enough, of course, but we have to be able to measure and demonstrate what we're doing and better communicate what we are doing so that the public at large knows and understands what our strategies are. And another point I'd like to raise is linked to the question put by the gentleman from Cameroon just now on the importance of education and health services. I remember a few years ago when I was in post in Washington, at that time, development debate centered on financing policies for education and health. And very little was said about the real economy or agriculture or industry. And now, today, I think the situation is more balanced. Of course, you're right, sir. Public investment policies in education and health are essential and will continue to be supported by public partners. But we have to ensure that the efficiency of these politics is measured and improved. But today we're in a situation where we're also more interested, there's greater interest in the real economy, resilience of the economy to resist shock, and a number of sectors in which public aid can assist to develop economies and create jobs. Jobs aren't created by the public sector. We mustn't forget that. Now, my last point on the gap and your question. Well, I hope that I've understood you. There were 2 points, a funding gap, which has been responded to, but there's another question. I think this is what you had in mind. This is the holes in the net, if you like. There are a number of initiatives, lots of initiatives, a number of sectors or segments which seem to be overlooked because they don't meet the necessary criteria. So I would say that we have to continue discussions. We have to open our minds to very good programs that sometimes aren't financed because they don't necessarily meet all the criteria that have been set for these types of programs. So you have to keep pushing. Roberto, 1 minute.
Because you're going to be around and you'll be talking in the corridors as well.
Yes, but for respect for the question, I want to touch very quickly on the question, because the philosophic response was given by Remy, but I think for respect to the question, let's give practicality.
Absolutely.
One, and this covers the question from the friend from Cameroon as well as the other from CARE. I think this is only 7 to 8% of the total ODA managed by the Commission. So let's see things in perspective. ODA is very important. Grant-only actions will continue and are indispensable in a number of sectors. This external investment plan, for as big as it can look, is only 7 to 8% of the relative budget allocated to this region. Therefore, there's another 92% that is going on grants, in education, in health, budget support, is going to actions at the base of the pyramid, very, very minute actions with NGOs, with civil society, with root-based organizations. This is for clarify. Brazil, muito obrigado. And like Mongolia, the Commission proposed to extend this plan, once that we are trying to prove, to all other regions. This is the approach. I think in 2021, the new financial perspective will see this kind of approach spread out, still maintaining ODA only, grant-only actions for vulnerability, emergencies, crises, which are, and also to reach communities and people, very poor people that cannot be reached by fancy or sexy constructions on financial engineering. So we need the whole palette. Now, on the sectors, I think it was answered. Sectors will be explored. We are exploring a green economy. We are exploring a green economy which put biodiversity and management, conservation as a source of income, of livelihood. Can we make it work? By the way, this is very important for security and stability. In Central Africa, there are niches of stability guaranteed by the conservation actions that we are trying to help. Water will be inherent to the water services. As you said, we have to address water problems. So it will be taken into consideration. For the base of the pyramid, as I said...
Your final point now, Roberto.
I'm going to conclude, because the base of the pyramid, we have to really challenge the paradigm. The pyramid is so high, well, we have to make it very short pyramid, so that the base of the pyramid is very, very close to the apex of the pyramid. That is the approach of the external investment plan: inclusiveness, financial inclusion, micro actions compared and also alongside big actions. That is the recipe. Let's make the very pyramid very, very, very short.
Very good. Thank you very much for that. I'm not going to try and wrap up what has been really a very rich and fascinating, and I have to say informative session, but just to highlight a few points. So this international landscape, this climate that we're living in, is really one of dramatic change. And unless we change with it, I think we're going to be stuck in a very bad place. So today we talked about ODA and how it is actually inadequate, and we all know that. We've known it for some years, to meet all our development needs, and especially not enough to meet the SDGs and the goals that we've set ourselves in Agenda 2030. And that, I have to say, is very good, because it's made us creative, it's made us adventurous, and we're exploring new ideas, new tools, and impact investment. The private sector is now more prominent in everything we do. So we're becoming creative and adventurous, and as you said, Monsieur Roux, we have and we know the tools that exist. We just have to start deploying them. And what I really appreciated from my think tank point of view in this discussion is that we're talking about local actors, we're talking about inclusion, we're talking about gender, we're talking about young people, because the future, I mean, as someone said yesterday, young people are not the future, they are us today. And I think the point that you made, Dina, about every single SDG has a business opportunity in it. I think that's something very, very important to keep in mind as we talk about resilience, as we talk about least developed countries as well. And my message, and I think your message, gentlemen and ladies, really was, don't forget the people. So with that, I'd like to thank our panelists. So join me in thanking our panelists, and I'd like to thank all of you for your questions and for listening to these very, very informative people.